everyone. This is a very last minute tips from me on two things. Number one is how do you treat your capital reserve, and number two, a reminder on your intercompany transaction. Okay, so first of all, your capital reserve. When you look at your midterm question, I apologize that I do not have the chance to record the entire discussion on the whole question, but I will focus on capital reserve. So if you remember your midterm, you have this one item called capital reserve. Capital reserve. So I will explain to you by telling you the fact that capital reserve exists. It will affect three areas, or you will have to focus and have to know three areas with regard to the capital reserve. When I am done with that, that means we are done. Okay, so first of all, you have to know that capital reserve is a part of the equity, right? So because it is part of the equity, therefore it is part of the net asset of the subsidiaries. Why do we need to know that? Because we want to calculate the goodwill. The goodwill is when you calculate purchase consideration minus net asset of the subsidiary. So capital reserve is part of the net asset. Okay, and in this question, it is more complicated than your final exam. Okay, more complicated because it has fair value adjustment. Good news, your final exam, it doesn't have fair value adjustment. Okay, I'm telling you that because your fair value adjustment, I have done the working for you. You have two subsidiaries can in the question, Y and Z. X, Y, and Z. X the parent, Y and Z is a subsidiary. So you have to find or calculate two net assets lah. Net assets of Y and net assets of Z. You can actually ignore this fair value adjustment for the purpose of the final exam because it is not there. But the main point here is that all of this, share capital, retained earning, and capital reserve is part of your net asset. Net asset here is something that you will use for your calculation of goodwill. Less net asset 1,000 yen, or no, this one. Y 1,005. So working to just now 1,005. Okay, that's one thing that you need to know. When we want to go back to capital reserve, it is important to know the ownership percentage. Okay, you always know when there are three companies, one parent, another one is subsidiary and sub-subsidiary. So you need to have what is the ownership for the first subsidiary and the NCI portion, and then the ownership for the sub-subsidiary and the NCI portion. Why this is important? Because we want to calculate capital reserve. Okay. Now, I told you there are three things to focus on. Number one, you calculate your capital reserve separately. You calculate your capital reserve separately. How do you do that? Working number 6 here. Again, working number 6 ke 7 ke doesn't matter lah. Okay, but how do you do this? Very easy. This is the first one out of 3. Number 1, when you want to calculate at the end of the day, kan, your consolidated statement, what is the value of your capital reserve here? I have calculated it to be 571.5 lah. 571.5. Okay, but how do I get 571.5? Let me just delete this first. It's very easy. Okay, the first area affected, which is what is the capital reserve that you report in the consolidated account. Okay, so the way you calculate it, number 1, just take it from the SOFT. It is exactly like retained earning. Okay, so retained earning, you will take 1850 of the parent, and then for the two subsidiaries, you just take the post-acquisition amount, betul tak? Post-acquisition amount. Capital reserve pun sama. That's why in your working number 2 kan, when you calculate what is the retained earning at acquisition, and then the retained earning at reporting date, the difference is the post-acquisition retained earning, betul tak? From 500 to 1,005, it increases by 1,000. This 1,000 is what you will use for retained earning lah. But we are not talking about retained earning now. We are talking about capital reserve. If you read the question at acquisition, this is capital reserve. At reporting date, this is the latest capital reserve. So there is an increase of 130. This is for Y. You have two subsidiaries. Remember, Y and Z. So for Y, the capital reserve increases by 130. For Z, the capital reserve increases by 80. And that's all. What do I mean by that's all? Guys, the percentage ownership. X as parents owns 75% of Y. X also owns 55% of Z. Therefore, just like your retained earning, X also owns 75% of the post-acquisition capital reserve, and X also owns 55% of the post-acquisition capital reserve. So when you look at the capital reserve, for Y, the increase is 130, and therefore working seat study. Okay, sorry, before the X, capital reserve, just take it for 30. For 30. For Y, do you take it from the SOFP? No, no. You take the post-acquisition. Post-acquisition, the difference. Kan? You don't take 280 ni. Because 280 ni is the one that we have now lah, but we want to take the difference. Betul tak? Okay, so the difference is 130 kan? So 130 ni is for Y. After acquisition, for company Y, we have increase of 130. So 130 lah. Post-acquisition, however, the company only deserves 75% of that. That's it. What about Z? If you look at the SOFP, capital reserve of Z or Z lah kan, is 180, but you don't take it from there. You take it from 180 here is reporting date value, but you take the difference, which is 80 kan? Okay, 80 belongs to the group lah, belongs to the related parties lah, but out of 80 here, only 55% belongs to the parent. Therefore, when you sum up, you get 571.5, which is what you put in your main statement here. That's it. So it is another separate working for capital reserve. That's all, guys. That's all. Number one. Number two, when you calculate NCI, I'm not going to revise everything. When you calculate NCI for both subsidiaries, kini silap ni. 25 and 45 lah kan, because parent 75 and 55. So NCI 25, 45. NCI non-controlling interest 25, 45. Working for 25, 45. I would suggest in the exam you write down the percentage lah, so that you are not confused. You know what percentage to use. Okay. This is something that you have done before this. For NCI, you will calculate it. Fair value plus the post-acquisition retained earning. So the total retained earning, a part of it will go to parent, part of it will go to NCI. Can you know that already? However, when you have capital reserve, there is an additional working. Additional working, which is the same thing. What do you mean the same thing? Sorry. When you look at the capital reserve increase, 130 kan? 130. You do not take the acquisition figure or reporting date figure, you take the changes, the movement of capital reserve kan? 130 kan? 130 will be shared between parent and NCI. So when you calculate your NCI, you add one more item, which is capital reserve. Okay. The increase in capital reserve to 25% belongs to NCI, therefore 25%, 0.5 multiplied by 130. 130 ni apa? 130 ni the increase in capital reserve. So 25% of that goes to NCI. Likewise, tengok Z. When you calculate NCI, guys, before this, when the question does not have capital reserve, you only calculate the share of retained earning belonging to the NCI. But now because you have capital reserve, that's why I told you it's the same way when you treat like the way you treat retained earning. Post acquisition of that, which is capital reserve, you give some to parent, give some to NCI. Okay. So when you look at the post acquisition capital reserve for Z kan, for Z from 100 to 180, that means increase in 80. So out of 80, you have given some to parent just now tadi lah. Yang 80 dah ni 80. 55% goes to parent kan, therefore for NCI another 45% lah, 82 multiplied by 45%. Habis. Second thing, I'm talking about capital reserves now. Okay, number one just now, separately calculate capital reserve to report in the main statement, the parents lah. Secondly, the capital reserve will be also apportioned, a part of it to be given to NCI. Lastly, when you calculate your retained earning, for your main statement lah ni, your main statement, your final answer tu kan, you have one item called retained earning kan. When you calculate this, do not include capital reserve. Do not include. For NCI, when you calculate NCI value, you include RE, yang retained earning, and also capital reserve, right? But when you calculate retained earning of the parents, when NCI gets the share of capital reserve, why is it that when you calculate retained earning, parents tak dapat capital reserve? The answer is bukan tak dapat. But you already calculate that separately. Working seats. That means in your main statement, you have written earning separately calculated from capital reserve. So parents pun dapat juga, but you calculate that separately. In other words, when you calculate retained earning, do not include post-acquisition capital reserves. Why? Because you have calculated that separately. Habis. That's all on capital reserve. And with regard to your intercompany transaction, just one reminder, very, very short one. You know that at the end of the day here, when you look at the question, intercompany trading, you know that it will cancel out each other, betul tak? It will be zero, right? Debit, payables, credit, receivable. The receivable will be eliminated, the payable will be eliminated because of the same figure, betul tak? So of course the answer is zero. That means it will not affect your final figure. However, there will be marks for working. I told you already when I give you feedback on midterm. So for your final exam, do not forget to include the workings. Tell me how do you write it off? Both of them, because they are marks for working. Although in the final answer kan, if you don't want to write this thing, receivables and intercompany transaction is zero kan. Okay, let's say you don't want this, you want to remove this, intercompany transaction you don't want to put, can, but make sure you have a working on it. Given you the answer kan for question 2, so you can see lah, actually there are some workings to show me that, and that's it lah. You will get marks for that. Thank you everyone and all the best.